right, welcome. It's 8:04 in the a.m., about 90 minutes before the open of the U.S. stock market. Great opportunity for foreign exchange traders to get together, talk shop, put together trade plans for tomorrow, next week, the rest of the year. Without further ado, let's go. Let me remind you that trading Forex is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. It's always a good idea to stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. We have 37 votes. Could a few more people vote, please, on the poll? Anyways, hey, good morning. My name is Wayne. I'm a currency trader. Very cool. I love this thing we call Forex. Right now, it's the beginning of seasonality. You should be up hundreds of pips. It's Thursday. You should be up hundreds and hundreds of pips since Monday. Cool. So we planned for it for a bajillion weeks in a row, and here it is. Boom. Oscar Mike. So everything's good and golden. Right as rain. I love Forex. So thank you for being here. If you got questions, I'll solve it. Yeah, let me answer your questions technically, fundamentally, seasonality, fundamentals, macroeconomics, all that kind of stuff. In fact, on the poll, which you should be completing right now, I put Baltic Dry Index. There's a wink, wink, nudge, nudge there. We haven't talked about Baltic Dry Index in a long time. We used to talk about it all the time, and then we never talked about it, and all of a sudden, boom. It's on there. Wow. Well, should we take a look at it? Doesn't that pique your interest? That would be a macro indicator. So if you want to talk about that, we'll talk about it. If we don't talk about it in the beginning, I might forget. So anyways, it's interesting right now. So anyways, take notes, get involved. Maybe you'll learn something great. Document it in the comment section below the recording of the video. Therefore, you can search your comments and then be able to pull up very specific videos in which there's moments in time of, I don't know, learning or brilliance or something. Value. Okay? So simply use the comment section under the recording as a way to organize these videos in the way that you see fit. You can tailor make your experience here at Forex.Today. I invite you to visit tradersway.com, fill out the form to open up a demo account, and then you can download CTrader or MT4 or MT5. They have a Mac version of MT4, I think there's a Mac version. Cool, right on. It's interesting, right? But ultimately, you want someone that executes quickly. Okay? You want someone to pay you swaps. Once again, I'm telling you, Trader's Way is quite unique. They pay full swaps. It's amazing. There are many brokers. It's probably the industry standard not to pay you full swaps. That's really amazing. I love that. You should try Trader's Way. This might be something good for you. Spreads are competitive. Execution speed is fast. They pay you swaps. They have customer service. It's world class. But ultimately, you're going to need to choose a broker that you trust. So you start that trust relationship on a demo account. And then if they earn your loyalty and respect, you'll fund that with real money someday. But remember, it's a symbiotic relationship. Okay? The reason they're part of our community is, hey, they want you to succeed because that will make you a better client for them. They'll make way more money executing your trades when you're profitable than executing your trades when you're not profitable. Because you'll pop $500,000 into an account, you'll blow it up, 3 months later, you're gone. That barely covers the cost of acquisition. So wouldn't it be a better business model if the traders could actually be successful and trade for years and years and years and years, yeah, it's a better business model. So think about it logically. So that's why I'm here. Anyways, tradersway.com. All right, so we got 51 votes. Okay, that's good. That's not bad. Okay, so I'm going to end the poll. And Baltic Dry Index came in second place. So let's start with the euro. First of all, let's just see where we are. Okay, Kiwi, nice. Euro, nice. Pound, lost it. Okay. Cool. Right now, so we got Euro and Kiwi. Okay. Not a lot. Not a lot going on, really. So you have to be careful. Tomorrow we have Jackson Hole, and it's not just Jackson Hole, but a speech by Chairman Powell, and that could be a singularity in the price time continuum, although I think he's just going to keep selling the idea of the Fed doing nothing. Excuse me while I sip on my coffee. Hey, how come the chat's not going in our thingamabobber? By the way, this coffee, 2 shots of Nespresso and 20% of my daily intake of fat. Okay. Right? They grind the bones. Huh? Be he live or be he dead, I'll grind his bones to make my bread. All right. So, okay. Oh, coolio. Bulletproof. Absolutely. It really is. It's not even cheap knockoff. All right. So, okay. So euro dollar. Why did you guys pick euro dollar? I can see euro being strong, but dollar, huh? But I guess so. Okay. Seems like maybe euro yen. Okay. Because this looks like a lot of that, right? This looks like a lot of this versus this. Okay. By the way, this knocked me out of my Aussie yen trades and my Aussie dollar trades. It was terrible. Only 110 pips on the Aussie dollar anyways. We got to do euro. Okay, euro. Okay, you guys want to do euro. Oh, okay. If that's what you want to do. Coolio. Okay. Where did we leave off? Bulls would buy here, bears would sell here, one of the teams would win. Okay? So the next part of the plan is this. Standard operating procedure, right? Okay? That's the London trade, and it presented itself in Asia. Okay? But there have been several days where London starts off well and then there's no follow through. That's tough. I mean, that's tough price action because this is tricky now because you're vulnerable to that, right? So a bull is going to be worried about that. But nonetheless, let's try to drill in because you're trying to ride that 21. So you drop into here and you're really, 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 really hoping this holds, huh? Okay. It's dangerous. Okay. Oh, tomorrow's speech? Yeah, I don't think Powell's going to say much of anything except that they're not going to move quickly. Mr. Kennedy's like, hey, I want to take the czar down a bajillion. Are you being overly optimistic? Well, I haven't been to the central bank website in a while, but are they raising interest rates yet? because that's going to happen soon. And that will appreciate the rand. Okay? No, they haven't started. They're going to when the Fed starts. Okay? Because the 10-year T-note a week ago was 125. Now it's like 135. By the end of the year, it's going to be 185. Okay? So rates in the United States are going up. Not the Fed funds rate, but interest rates. And South Africa is going to have to compete with that. Okay. Henry says first hikes in Q4. Right. Because of the Fed taper. Isn't that just weird? Because of the Fed taper coming up, South Africa is going to have to raise interest rates. Because it's competition. Right? So I have a choice. I can lend my money to South Africa, or I can lend my money to the United States. Let's say on a 10-year note, interest rates go up in the United States over the next 6 months, and we're back at 2.0. If interest rates in South Africa are 2.0, which one will you invest in? Well, everyone's going to pick US dollar all day long because of less risk. Okay? This is a safe haven, in fact. South Africa is a risky emerging market. Lots of uncertainty. So, investors will have to be compensated. So, if the interest rate is 6%, that might be more attractive. Okay? But here's the thing. If it was 6% when the United States was paying 1.25, okay? And it goes up all the way to 2. So, right, now there's a 75 basis points increase. Well, there's going to have to be more than a 75 basis increase to offset the risk. So now, South Africa will probably have to get closer to like 7.5 or even 8 to compete with the 10-year T-note. Okay, and if the 10-year T-note goes to 3% in 18 months, well, look, South Africa is going to be at, closer to 10. You see? So if interest rates, if yields are going up in the United States, South Africa is still going to need the money, so they're going to have to be more competitive. It's interesting, isn't it? So because of the Fed taper, South Africa is going to need to raise interest rates. Amazing. All right, so, here's what you would do is you would write that down. Okay, you would take your notes now on a piece of paper, and then in the recording, you would document what you just wrote down so that you can go back and say, you timestamp this, right? So you look at the time. I don't have the video in front of me, but you write down the timestamp. So at 8:21:42 seconds, Wayne says this. So you timestamp it. So now you can go back and Wayne explains why interest rates go up in emerging markets when the Fed adjusts its policy. Okay? You'd do that. And now you'd always have that. And in 10 years, you can go back and just review what I just said. Okay? All right. So there's that. Now I want to do Baltic Dry Index. So I'm choosing. Now I haven't done this in a long time. Baltic Dry Index chart. Yeah, that's really what I want. And let's do this one. Okay, there's the chart. And you're like, hey, yeah, wow, look at that. It's gone up since April. Okay. All right. Check that out. In 2017, it averaged about 500 to 800. 2018, oh, I guess that's 17, right? 2018, somewhere between 500 and 1,000. By 2019, it was 400. Then there was a spike, went all the way to 2,400. That's a huge spike, but then COVID brought it down. We go through COVID, and we're at 400 again, and now we're on our way to 4,200. We went from 400 to $4,200. That's an index. Okay. What do you think? A 10x increase in the Baltic Dry Index, much of which is from this year. This year alone, we went from 1,200 to 4,200. Plus 3,000. In a typical year, it's been between 500 and 1,000. So in a typical year, it goes up and down 500. We're currently up 3,000. Wow. Okay, what is this? When you move iron ore, okay, and coal from Australia to China, you got to put it in a Baltic dry goods shipping ship. Okay? You have to buy a boat, or not buy, but rent. Okay? You have to rent a ship, put your iron ore in it, and move it from Australia to China. This is an index of global prices for that type of ship. So you might be moving scrap metal from one country to another. Maybe it's iron ore, maybe it's coal, maybe it's, what does this say anyways? I think grain will go in this stuff. Yeah, coal, grain, all that kind of stuff, right? So this is an index of the prices of renting the ships. Now you're like, well, Wayne, why does that, what kind of alpha does that provide? Demand. Okay? Either demand has gone up or the supply of these ships, which is quite cyclical, has gone down. One of the two. So you'd have to do further research. Now, let's just say there's more demand now than, well, 2020. Okay? What does that mean for global macro? How does that fit into your thesis? Well, it's not necessarily energy. Iron ore and coal, this, iron ore and coal, when mixed together, creates steel. Okay? But anyways, whatever it is, there's demand. It's seemingly, if you're up 600% this year than 2 years ago, right? Pre-crisis. If you're up 600% from pre-crisis, then maybe, just maybe, global demand for everything. So I want you to think about your investment thesis. What's my investment thesis since March of 2020? Okay. Now, yeah, which is the same thing as that kind of going up, right, Jim? Global macro expansion. Now, I think one of the reasons this is so high right now is if you do a little Googling, you'll find demand is up, but supply is down. Now, so it's a combo. That's why it's up 600%. It's a combination of these two things. Now, why is supply down? Did they scrap half the ships in 2019? Or I mean in 2020? Did they scrap them? No, they actually didn't, because, we already went through a crisis back in 2008. So many of the ships were scrapped and newer, more modern, more energy efficient ships were created. And then 2020 was a COVID issue, not a recession issue, like a business cycle issue. So the thought was demand will come back really quickly, so you wouldn't scrap your ship. Jean-Guy got it. Unloading problems. So here's what's happened. Okay? You buy some iron ore and you move it back to China. Okay? Great. The problem is China has COVID-19 issues, which has lowered the supply of dock workers. So you get your iron ore to China, and there's already several boats in front of you. Maybe it's wheat, maybe it's coal, maybe it's your coal, right? You got iron ore here, but you also bought coal, and they haven't unloaded your coal, so what do you do with your iron ore ship? It sits at sea. So apparently, around China, there's boats and boats and boats, okay, waiting to be unloaded. So if you decide to buy some green coal, clean coal from Australia right now, there's not enough boats because there are so many ships already at sea waiting to be unloaded that now there's not enough ships. But you're like, man, I need this coal. If I don't have this coal, I go out of business. So you're like, how much to bring this back? Well, normally it's $6,000 a pound or $6 a ton. You're going to pay $28 a ton. You're like, oh my God, really? But you're like, but it's better than going out of business. So I'm going to take a loss in this one, but a small loss is better than going out of business. So you're like, you know what? Damn it, I'll pay it. And that's why prices are high. And then you get here and you hurry up and wait. Okay. So Mohammed's like, what about extreme inflation by demand? I don't think it's necessarily a giant increase in demand. I mean, there is demand there. And the demand, that's last year's play. I mean, we called that, we nailed that. So right now it's just like there's a shortage of workers, and therefore there's a bottleneck. Quite literally, it's a bottleneck. Well, I guess it's not literal. You're like, wait, there's no bottle. Okay. Figuratively, it's a bottleneck. Okay? And here's the interesting thing, right? Yeah, I traded through all of this. This is crazy. So we went from 400 to 4,000, which is massive, right? A 10x move. Okay, 1,000% increase. But it can go 300% higher to 12,000. Okay. Okay. Now think about how rich America was during that peak. Okay. Right in here. America was filthy, stinking rich. Okay. Okay, This is when your favorite stripper owned 5 condos. If you watch The Big Short, I'm talking about a scene where they're at a strip club and she starts talking about her real estate portfolio. And it was more than 5, wasn't it? It was like she owned like 12 apartments, spending all her cash. Anyway, so what happened during this period? So, maybe something similar happens here. I hated the movie, Robin. I hated it, but no worries. Okay. Hang on, my AC is turned off for some reason. Hang on, let me go whack it. All right, so anyways, there's the Baltic Dry Index. Yeah, Robin, I didn't like it because it glorified all the wrong things. It sort of simplified some things. Some of it was a little too cheeky for me. But like The Big Short and The Wolf of Wall Street are sort of what the newer generation, especially around the 2008 crisis, it's how they learned about what happened, I guess. It's like, to them, it's almost like a documentary. Watching these 2 movies, and it takes, 2 bad things, in my opinion, and then tells everybody that's what I do. That's what our industry does. That's what Wall Street is like. No, it's not. 99% of Wall Street are just hardworking individuals that sit down all day and crunch the numbers and go over their spreadsheets and go over their models and make tough decisions. And, and then, but people think of the Wolf of Wall Street, for example. I'm like, that guy was a liar and a thief. That's not what Wall Street does, right? That's why he went to prison. He was a jerk. So, no, it's glorifying the wrong thing. All right? It's like saying a guy is successful because he drives a Lamborghini, but then you find out he robbed a bank. Well, there's no, I don't think there's anything good about that. Or he has a Lamborghini, but lives in an apartment, right? You're like, well, dude, you're poor. But I have a Lamborghini. Well, then you're stupid and poor, right? Like, I don't know. It's just like, it's all the wrong things. You want to be a hero in my book? Show me that you're saving, hundreds of thousands of dollars to send each of your kids to college. That's what I care about. You're like, you got that? Right? Instead of a $300,000 Lambo, you have a $300,000 tax deferred college savings account for your kids. I'm like, boom, now you're a man. Okay, but anyways. So I don't know how we got onto that, but anyways, here we are. All right, great. So let's move over and do some yens. Showing your age with these pens. Is that right? I don't know. I think young men often have the wrong things in mind. They have the wrong ideas. You're going to be young, so that's what you want, right? Girls and cars and fancy watches. But that also makes you boyish. So eventually you'll age, right? Eventually, and then you'll say, oh, it's about family, it's about lineage, it's, that's what matters, right? Yeah, I guess so. I don't think I'm old yet, but I guess I am. I don't know. All right, so here's the trade from yesterday. I got my stop at break even now. So what do you think? Okay, that's how you scalp, yo. Okay. Cool, right? Nuno's like, yeah, drug addict too, yeah. Robin. Yeah, Robin, and talking about the movie, it's glorifying the wrong things. Hey, what's up, AR? Welcome. There's still a couple of donuts and coffee at the back. Help yourself. So what did we do yesterday? This was a 33.99 OCO, wasn't it? Cool. So now I can't lose if it comes down. Look, I had a free shot at the net. Took a shot. Didn't go in. All right. Didn't lose. Right. I have a free opportunity now. Easy peasy lemon squeezy. Euro. Okay. Euro, I believe. I don't remember where I got this one. Somewhere in here. I don't think I got the early one on Euro. Do-da. Yeah. I'm in here. All right. Anyways. Cool. So now what? Well, I got to look at, I got to look at the floor. I got to define what's going on here. Okay. This is critical. Okay. This is critical if we're going to maintain altitude now this way. The target is 130. So this move here is only 200 pips. Okay. 200 pips total. I'm in later, so I'll be lucky to get 150 out of this for the week. Okay. And I don't know what to expect on Friday from the market, because I don't know how the market's positioned. One way to do it is to say the Fed tells us that they're not even going to do anything anytime soon. Now people finally understand, maybe December they'll announce and start in January. Okay. Now in that case, you could front run the Fed again on bonds and maybe dollar gets strong. Or the dollar only got strong in the June taper tantrum because it was going to get strong anyways. And now maybe it stays weak because it's supposed to stay weak anyways. So, the Jackson Hole speech on Friday and then later the Fed meeting are sort of the singularity in the price time continuum that I'm really, cognizant of. Yeah, it might work for me. It might work against me. So I don't want to build positions too big before then, right? Mohammed says, many hunters in the market now. I don't even know what that means. There's no hunters. There's no hunters, man. There's no hunters. I don't know. I don't even know what that means. Okay. There's bulls and bears, and they're selfish. There's nobody hunting your stop. Right? Okay. That happens at turning points in the market where there's profit taking. But like hunters, we're all hunters, I guess is the other way I'm looking at it. But they're not concerned about the other traders. They're just trying to get their positions on. Okay. Okay. So a bull might try to do that, right? There's one more hurrah. Check things out, like what's the day trade long? Where am I? Okay, you see? Okay, so again, you can do an auto type trade. You can say, once again, you can do a 33.99 OCO, right? If you wanted to. And you say, boom, and boom. Cool. Now, you might say that's kind of late in the game for that. Okay, so we can check, was that a good trade? No. Okay, what is a good trade? The good trade is this. And this says out here. Okay? So the reason I did that is many people are doing mostly the right thing, but not all the right things. Okay? So this is why I like to have pivots, for example. Because you might be only looking at the trend. Okay? And even if you don't use pivot points, what this just shows you is like these are similar. I mean, they're not Fibonacci levels, but they could be Fibonacci levels. If I had an indicator that drew Fibonacci levels, it would be the same thing. Like it's all variations of price action. Okay, great. Or when you're moving averages, all that is irrelevant. What I like about pivot points is they show you where the trends are likely to start. Remember, it's a double bottom, higher, high, higher, low. So it's not just the green zone. See, this is not a buy. This is not a buy. Well, this could have been a buy, actually. But here's the interesting thing. What this chart lacks is to say, this is where you stop. Matrix says, what do I need to learn? I'm struggling with interpreting central bank monetary policies when I read them. Have you completed the fundamental course at FX Bootcamp? Specifically, it's like 12 hours of monetary policy training. Have you done that one, Matrix? Yep. Well, there you go. Yep. There you go. That would help, right? So by hour number 3, okay, by the third hour, you will learn how to manage a balance sheet for a commercial bank. Because if you don't know how to be a bank manager for a commercial bank, how could you possibly understand a policy for a central bank? Right? So if you don't understand how to manage, again, the balance sheet at a commercial bank, how would you be able to understand the Fed's balance sheet? Because you don't understand how a bank works. So yeah, so I teach you that by the third hour, we're getting into the meat already. Okay. Chand, is it done? No, I think I got one or two more. I've just been so busy. Been so busy. The PowerPoint is done though. No, I did not, Peter. Yeah, right on, Matrix. I think it... Okay. Does anybody need a coupon code for FX Bootcamp? All right, so let's get off that. Yeah, watch this. New window. No, not new window. See? It drops it from 500 to 382. Just type in COVID-19. See, 495, COVID-19, 382. See, FX Bootcamp membership, COVID-19. Oop. COVID FX Bootcamp membership. Okay. Mohammed says, give people 90% discount. Well, I'll tell you what, before COVID-19, how much was it? Does anyone remember? It was like $3,000, wasn't it? So now you can buy it for $382. So I kind of did. Well, it depends on the time, right? It certainly was 1800, right? Right? But Jim, like back in the day, right? People paid $300 per month for years and years and years and years and years and years. So I've moved the price around to help people. So when COVID hit, I dropped it from 1800 down to 382. Okay? And I coach people every single day, not once a week, every day for over 6 months. It might have been a year. I can't even remember. Somewhere between 6 months and a year. And I didn't raise the price. So I dropped the price by almost 90%. And I increased the hours, the live hours, by something like 500%. Yeah. Alejandro says, yeah, it was more like 2K, something like that. Lucas paid you well over 1,000, right? So it's like, dude, I already did that. Okay. Already did all of that. So join or don't join. Cool. All right. Aussie. Okay. I got knocked out of my Aussie, as I told you. And you might say, why? And whatever. It's more like an area of the consolidation around 80. I believe you'll see why if I shift this to daily, day trading bullish, and change the time frame and zoom in. Oh, I guess maybe I didn't get out. I don't remember. I must still be in it. Oh yeah, my bad. I'm in it. Still in it. Stop is at 79.6666. So my stop is right there. Okay, cool. So I need some up, right? I need some up here. I need some up, but we've double topped. Oops. I guess I'll leave that. We've double topped on 80. So there's the risk. Okay. Okay. Right now, we are still obviously trending. Okay. Isn't it interesting how this is the mean? Look at the 55 EMA. I mean, essentially the mean, right? And now this is the mean of the upper quartile. And I don't even know if there's a 200 here. Oh, there's the 200, right? And maybe that'll become the mean of the lower quartile. But maybe that's the magic of the math, maybe. Maybe the whole time this says you're bullish, the 200 is the mean, the 55 is the mean of the upper quartile. Meaning now you have this overbought, oversold, overbought, but from a bullish point of view. And if you're down here, you're probably rolling over, right? So you could almost look at this as, your ribbon. I wonder if I can create something like that. Like your ribbon now is down here, right? Like you're riding this. This is the support. Okay. What I'm trying to interpret is the psych level being important or not. So it's got to start clicking up, and then I'm going to move my stop further to lock in more profit and try to let it run. But right now the yen is weak. So Aussie yen is up, Euro yen is up, Kiwi yen is up. Pound yen is struggling. Pound yen is struggling because pound is weak. But the pound just kicked off of a pivot. So we can take a look at like almost everything kind of looks like this, right? Like we're here and the buy was here in Asia, right? Let's zip around, going to the pound. I don't have it here. So let's pop it in there. It's different. The pound is the odd one out. There's beast. Bar 1. Bar 2. I hate how this is organized. Oh, there it is. So now we go to like day trading. Where's it swing trading? No, it's day trading. All right, so go to template, day trading bullish. Okay, there, that's what I'm talking about. So you make that big, zoom in. Okay, everything else had the touchdown in Asia. And right now we're down like this, and it's the laggard. Okay. 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 So there's some sort of geopolitical, like maybe news in here. So that's sort of the last one. CAD yen. CAD's had some trouble in the last few days relative to everybody else. And kitty CAD is here. So I already kind of showed this. Okay. What? Right? This is yesterday's trade. It's performed the least well. Maybe you're analyzing it this way and you're like, hey, well, as long as it's fibbing, right? Well, remember how I said if you're using daily pivots, it's not a whole lot different than using Fibonacci? Well, right? There's the low, there's the high, there's your buy zone as a bull. But check this out, change the template now to day trading bullish. And you'll see you just had your op. This little dip is basically the central, right? Look at this. Beautiful little buy. Do you remember when I did the trade? It was yesterday. Right? Do you remember? What did I do yesterday? What I did yesterday, so we were in this period here, right, during the webinar. And what I did is I looked forward. I didn't look back, right? And I said, check this out. Okay. Now, this actually would have been a little bit lower yesterday because this obviously closed high and that pulled it up. So it was probably something like closer to this yesterday. Okay. And somebody asked a question and like, how do you do something? And I'm like, oh, well, that's easy. Look, so I went, okay, we're in a buy zone. Boom, up. Okay. Now here's the next thing. This is your pre-London. Okay. This is the beginning of a nice little trade. This is the Asia fade. And this is the long and gone. And this has been happening in the Asian, this has been happening just the last few days quite a bit, where it just rockets and then it comes back, So there's a lot of people jostling for position. Okay. Is it possible to avoid Sunday? Some do, but I like Sunday. I trade Sunday, so yeah. Okay. Mm-hmm. Is that what you want? You got to put that together. What's the plan, Stan? Kicking it off to 21 or not? Okay. So in the next 48 hours, I'm likely to go from very, very, very cautious to maybe very, very aggressive again. Okay. Is there a way to see bullish versus bearish volume? Yes. Yes. Let's do this. Let's do this because I don't have it here. Trader's Way. If you got a problem, I'll solve it. Where is it? maybe here. Here we go. La 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 la. This is a Trader's Way tool, by the way. Did it download or not download? It's not downloading. Too bad. I'll have to ask them about it. Oh, it's downloaded. Is this? Anyways. So where's the download then? I didn't see it down there. Anyways, okay, allow. Okay. All right, where's it downloading? What browser? Is this Google? So where did it download it to? Oh, here. Manage. Oh my God. So where did it download it to? It said there's multiple instances. But why didn't it download it like it normally does? I don't know. Oops. What did Windows do? Weird. Is it my download folder? Jesus Murphy. Gee whiz. Hate Windows. I guess this is it, right? No. No. I don't know where it downloaded. Anyways, you go there and you get this, and it does show you a price ladder, a volume of the bid ask above and below price. Control J. Same thing though, isn't it? Yeah, and of course it doesn't say I'm downloading anything. So strange. It should just download Pachop. So anyways, I'll look into it. I don't think I have it on this machine. I used to have it on a different machine. Quick deal. I'm going to try it. No. Anyway, so I'll see. Maybe I need to reboot or something. But that's what you do. I'll send it to you guys. Maybe I have better luck. Okay, but it will show you. Okay, so imagine all the liquidity partners now. And what you're seeing is a price ladder. You see the lots for the bid and ask at different prices. So the price is currently 33.68 to 33.69. So there's a one pip spread. Okay. Okay. And then at the different prices, you can see how many lots are on the bid, how many are on the ask. Okay. So you're like, ooh, look at that, 67. At 67.6, there's 25 bid, 7 ask. Okay. Plus, another interesting thing is if you're doing a lot of scalping, you can have a close all and just close all your positions. That sometimes is helpful. Let me refresh this, try it one more time. Nope. Famobix says, but you won't get the exact volume, right? But you'll get from the liquidity. But there's more than one LP. Okay, so you might have LP, 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 and your broker. So it won't be total volume, but I bet you it's pretty representative. There you go. It's, it's not going to be dramatically different if you had all volume. So you're going to have the same as, let's say, if you have 80% or even 60% of the market, it's going to be there won't be any statistically different numbers than if you had 100%, right? And Famobix says, but every has different LPs. Yes, of course. But very often they're very similar. And like this LP and this LP and this LP, they're not going to have dramatically different prices, but they'll have different volume. Okay? And right? And then I'm not sure about this, but there's probably an algo on the broker side to kind of average out the price between them. And that's sort of the difference between like a VAR account, a fixed spread, okay, and then an ECN. Like there's just going to be different ways to match you and bill you for the service, because the broker has to pay for the LPs. LPs cost money. So, right? LP, 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 LP. And if the broker gets so big that they're having trouble filling orders, they'll have to get a new LP. But all these LPs cost money. But then they have to license things like MetaQuotes for your MT4 and MT5. That costs money. Okay? And it's not cheap. It's redonkulous. Okay? So anyway, so there you go. Yep. Okay? So can you see how you could be trading tomorrow's pivot right now? Just like we did here yesterday. Just want to make sure you're paying attention. Not that you should or want to or whatever, but there's something going on there. Okay? So if you're not going to be here, maybe you need to be here. Okay? If you're not going to be here, maybe you need to be here. So one of the things that somebody said yesterday, I think it was, is like, how do you be here and how do you do it and all that kind of stuff. Okay. So for example, let's say at the end of the day, we're here and we're at 87.50 and you're like, well, I'm looking at this. If we can get back down to 87.40, I want to buy. And you don't know if it's going to happen pre-Asia Open, during Asia Open, London Open, and how do you trade, and how do you sleep, and how do you do this, and how Wayne, how, right? What's the trick? And you're like, the trick is, well, actually, I don't want that. Oh, because it's up there. Well, I'm assuming because we're up here. You put in an order. Now, because I'm above price, I can only do a sell. Okay. But if price is up here, that's what I was trying to tell you. If price is up here and you want to buy down here, you just place that limit order. Okay. Now, the danger of the limit order is that you get put into the market without a stop. And so that's why I do this. So my standard operating procedure is I open this up and I say auto stop 33.99. Okay, that's just a basic day trade. Now think of this. Okay, if I'm up here at 87.50 and I say I want to buy it, if it drops 20 pips. Actually, it's even less than that. It's amazing. It shows you how little this is moving because I'm like, wait, that's only a handful of pips. It's amazing how slow this is relative. It's not as good as the other trades. But anyway, so let's not pay attention to actual price. Let's pay attention to what typically happens on a trade like this. So let's say it goes up and hits a number like 88, but you want to buy it at 87.50, okay? Which is much more typical for a yen pair. So what you do is you put your stop at 87.50 or 87.55, depending on how aggressive you want to get in. So now it's got to drop, let's say 45 to 50 pips, okay, for you to buy it. And now your stop is 33 pips below that. So let's say your stop is 75 to 80 pips away, typically, from where you are in the moment. Okay? Now, if you trade like that, so now you're at 88, if it comes down and puts you in, right, and your stop is there, your stop is somewhere closer to, let's say, 87.25, right? Or 87.20. And you're at 88. And now you might say, well, the average daily range on this thing, let's say, is 100 pips. It's probably closer to 150. Okay. Well, on this kind of setup, it's probably closer to 125 to 150, but let's say 125, keep it more realistic. Okay. And you'll notice that for you to get knocked out with a loss, you almost need a fully bearish day. You understand? Like, you can't be a little bit wrong. You have to be 100% wrong. Like the bullish trend has to end for you to get knocked out. You have to have a fully bearish day where it goes, right? Bullish, 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 bearish, bearish, bullish, 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 bullish. And then you let it come down, bearish, bearish, and you buy it, but it goes bearish, 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 bearish. Well, that's when you want to get out. And that's probably worth 33 pips. But you have to let it drop 33 to 50 to get the entry and then lose another, right? And so now it's a good loss because you bought it low. And the only way you lose money is if you're 100% wrong. The market reversed on you. Versus this kind of stuff where you guys get knocked out in the noise. Okay? You get knocked out in this stuff and you miss the move because your timing is so important, right? You bought it here, but you lost money here. Okay? You're like, you're so worked up on price and time, where what you should be doing, or what I'm trying to teach you, I mean, you can do anything you want. It's not that you should, but I'm trying to get you so you buy low and you're done for the day. How do you lose money? It goes way down here. Okay? I don't want you to lose money in this period. Okay? You log in for New York, you place 5 different trades in 5 different directions, and somehow you don't make any money. Where I'd rather you just buy and now you're done for the day. And when you're in New York, I keep telling you, here we are in New York, you should be trading tomorrow. You should be planning tomorrow. So you carry this forward and you're like, oh, I want to buy it down in there. So in New York, we bought it here, okay? But someone else could have bought it here. It's the same trade. This is the front run trade where we bought it, but someone else could be here doing what I just taught you. You're like, okay, I want to buy this. This is clearly an upward move from daily pivot to daily pivot. Okay, great. But we're up here. We have a higher high. How do we buy this? Okay, there's your base. Here's your higher high. How do you buy it? High or low? Where? Well, daily pivots would suggest somewhere in here. So you could just do something like this, like limit order, or just one limit order here, not the lower one, but the higher one. So you're like, okay, buy it off the central, put the stop down 33. Okay, so we're at 20. So your stop would be about here. And your limit is here, what, 87.67. Okay, so you do that. Make sure your OCO is on. Okay, make sure your OCO is on, because if it hits your entry, it's going to drop the stop automatically for you. Okay, so it comes down while you're sleeping, puts you in. And this is what's been happening to me quite a bit recently, where I wake up and I see these big moves where I made 50 pips, but by the time I log in for New York, I'm back up to just a handful. And then in New York, takes off again, maybe, right? But I'm growing quite neutral right now as we get ready for tomorrow. Abdul says, how do you set up the, right? Well, you can do it manually. I haven't done that in a while. It's been so long I haven't done a manual trade in forever. It's so funny. I have no idea how to do it manually. New order. Okay. And you can, right? Market execution pending order. Okay, so it's a buy limit, and you put your price, put your stop, put your take. Okay. Okay, so you have a stop, you have a limit at this price, and then you can place your pending order, and if it gets triggered, and it does all that. But then you have to calculate, and it's just too slow. Okay, so if you go to metatraders.com, and I think it's in the complete toolkit, you get this, you get your auto stop. So what I do is, I'm already running it. All right, hang on. So the way I do it is this, okay? I say, there's my stop, there's my entry. Of course, you can change all this, right? So it's standard 25.50, okay? I've done swing trading like this, 150, 333. That's a pretty standard swing. Okay. Or 99, 333. Okay. And the thing is, it'll turn pending orders into working orders, and then when the working order hits, the auto stop puts the stop in the limit. So that way you can say, all right, if it drops down to here, buy it. What do I know? It's going to do a 99, 333 OCO. Now I can go to bed and sleep at night. Just make sure you got this running. Okay. Is that clear, Abdul? You got to buy the auto installer at metatraders.com. Take care, Nuno. Okay. The link is in the description below. All right, I didn't sleep much last night, so I'm spent. And I realize it's only been an hour, but dude, I'm spent. So anyways, thank you for being part of my team. Thank you for being here. Thank you for the loyalty and respect that you show me every day. I appreciate you. I want you to succeed. I'm trying my best to help you succeed. If you are a member of the FX Bootcamp swing trading group or portfolio manager group, I will be meeting with you at 2 p.m. this afternoon. And I hope you had an amazing week. And we're going to set everything up for next week. And next week's going to be tricky and dangerous. But that's why we do this thing called Forex together. So without further ado, peace on earth. Oh, I forgot to show you too. Forgot to show you. I got my buy and my sell cufflinks on for you. Huh? Look at that. Trying to look pretty for you. Buy. I don't know. I guess it's backwards. You can't see it, right? But anyways, buy and sell. I want to look pretty for you. So have a wonderful day. Cheers.